Floods strike fast, often without warning, leaving behind destruction that feels impossible to recover from. Homes ruined, belongings lost, businesses shut down, and in many cases, financial lives turned upside down. But while the road to recovery is long, it is possible. With the right steps, you can go from flood damage to financial stability again. This is your step-by-step guide to recovering assets after a flood. Let's start at the very beginning, the moment the floodwaters recede. The first step is safety. Before you think about money or recovery, make sure it is safe to re-enter your property. Floodwaters often carry hidden dangers, electrical hazards, structural damage, or contamination. Once authorities give the all-clear, you can begin the process of documenting your losses. Documentation is your foundation. Take detailed photos and videos of everything: the damage to the structure, the belongings, and even the smallest details. Don't throw anything away yet, no matter how ruined it looks. Insurance companies need proof, and the more evidence you provide, the stronger your claim will be. Next comes contacting your insurance provider. Whether you have coverage through the National Flood Insurance Program, known as NFIP, or a private insurer, time is critical. File your claim as soon as possible. Provide the documentation, keep a record of every conversation, and request a written estimate of the damage. Remember, insurance companies are often overwhelmed after disasters. The sooner you file, the faster your case moves forward. But insurance isn't the only lifeline. After a flood, federal and state disaster assistance programs may become available. FEMA offers grants, temporary housing, and even low-interest loans through the Small Business Administration. These resources are designed to fill the gaps insurance may not cover. For example, if NFIP won't pay for temporary living expenses, FEMA disaster aid might. Applying quickly and thoroughly increases your chances of getting help. Once your immediate needs are addressed, it's time to shift focus to financial recovery. Floods can cause hidden costs beyond property damage, missed work, medical expenses, or even losing access to your business income. This is where budgeting becomes essential. Create a post-disaster budget that prioritizes essentials: housing, food, transportation, and medical needs, while cutting out non-essentials until your finances stabilize. If you're a homeowner with a mortgage, contact your lender. Many banks offer forbearance after natural disasters, allowing you to temporarily pause or reduce payments. This can ease the financial burden as you wait for insurance or aid. For renters, talk with your landlord about repairs, timelines, and possible relocation assistance. Recovering assets also means rebuilding your savings. Even if you can only set aside small amounts, begin rebuilding an emergency fund immediately. It may feel impossible after a disaster, but having even a small cushion provides security against future setbacks. For business owners, recovery takes another layer of planning. Document lost income and expenses related to the closure. Apply for SBA disaster loans or state-level recovery programs. Consider how to make your business more resilient, whether through flood-proofing equipment, moving inventory to higher ground, or even diversifying operations to reduce downtime in the future. Now, let's address credit and debt. Flood recovery often forces people to rely on credit cards or loans to cover immediate needs. This can create long-term financial strain. The key is to manage this debt strategically. Contact creditors to request hardship programs or temporary relief. Many lenders have disaster assistance policies that can prevent your credit score from collapsing. Avoid high-interest loans or predatory lenders who target disaster victims. Instead, seek nonprofit financial counseling if you feel overwhelmed. Another crucial part of recovery is rebuilding your assets, your home, your possessions, and your long-term wealth. When repairing or rebuilding, think not just about restoring what was lost, but about improving resilience. Elevating utilities, using water-resistant materials, and investing in protective measures can save you from repeated losses and even lower your insurance premiums in the future. It's also a good time to reassess your insurance coverage. Did your policy provide enough? Did you face gaps you weren't prepared for, like temporary housing or basement damage? Consider whether adding private flood insurance or supplemental coverage makes sense for your situation. Protecting yourself now reduces financial pain later. Emotional recovery is part of financial recovery too. Flood damage takes more than physical property. It takes a mental toll. Stress and uncertainty can lead to financial mistakes made in haste. Take time to breathe. Seek support from community organizations, churches, or support groups, and avoid rushing into big financial decisions while emotions are high. Step by step, recovery is possible. It begins with safety, moves into documentation, then insurance and aid applications, budgeting, debt management, and finally, rebuilding stronger. Every step you take gets you closer to stability. And while it may feel like the flood has taken everything, remember, assets can be recovered, homes can be rebuilt, businesses can reopen, and financial health can be restored. What matters most is persistence, planning, and making the right decisions at the right time. The journey from flood damage to financial recovery isn't easy, but with careful steps and the right support, it's absolutely possible. Protect what you can, rebuild what was lost, and use the lessons learned to create a stronger, more secure financial future. Because recovery isn't just about getting back what you lost. It's about building resilience for what's ahead.